We have just received new information, new data, new signals that suggests that the economy is seriously unwell, but the markets don't care, and we could be going through the final melt up before the biggest meltdown that you've ever seen. And in today's video, I'm going to be sharing with you some observations and data relating to the latest earnings season to inform your approach on the markets and the economy. Let's take a look at this chart here from Goldman Sachs. Global equity positioning of systematic macro is approaching what I would say heady and dangerous levels. This chart conveys how quant funds are currently positioned in the markets, and you can see that these funds require the market to continue going higher, or big sells could hit the tape. So it's time to at least get a little bit more cautious. We can see here from a fundamental standpoint that US corporations, they've been relentless about their share buyback authorizations. That continues to be good news for markets because, like I've said earlier on the channel, last several weeks and months, you can see that share buyback authorizations, that's really accounted for about $1 trillion in an equity backstop for liquidity. And central banking liquidity, that's also accounted for another trillion. So the US markets have essentially been supported by $2 trillion of liquidity just from central banking injections and from share buyback authorizations. But as you can see in this chart, the liquidity picture is starting to morph. So something to pay attention to. We can see here the total assets of the Federal Reserve since the SVB crisis is starting to taper off. But that hasn't changed the fact that the National Financial Conditions Index continues to have loosened from earlier this year. Now, make sure to join me on Substack, Twitter, and Instagram, along with my other friends on the platform. As we approach this very pivotal moment in markets, I'll share my best-in-class observations to help you. Take a look at UPS from their earnings transcript, which I consider to be a great signal for shipping. They're moving their volume projections lower, moving from their volumes of down 1% in their base case down to potentially 3%. If we take a look at McDonald's, which is a signal for middle-class American fast food eating habits, we can see that pricing, increases in pricing, has its limitations. McDonald's talks about how they are facing pricing resistance in many of their markets. We can also see from CSX, which is a major bellwether for railway and shipping freights, the slowdown in the economy is essentially here. The company talked about a rather weaker forecast and how they expect a weak market to continue to be in play later this year in the US and in Europe. But even though the economy has broadly weakened, not everything has softened. We can see here Ulta, which is the ultimate signal for beauty and self-care. They've been quite robust. And with a promotional environment, they might continue to do well in this environment. In fact, as you can see here, pre-COVID sales per gross square foot was averaging about $500 a square foot. And at that time, the margin was about 15%. Now, the sales per square foot is about $800 and margins continue to be stable and moving higher. And that's why Ulta investors continue to be rewarded, as beauty and makeup seem to be recession-proof. But it's not just investors who can benefit from beauty and makeup products. In fact, everyday folks like you, your girlfriend, or your mom could benefit from these products, and that's where our video partner today comes in. Since we're on the topic of self-care and skincare products, I wanted to show you a product that you could gift your girlfriend or your mom. If you're looking for an amazing gift for them, you're in luck, because the partner of today's video is a Swedish beauty tech company, Foreo, with a cool product. So, what is Foreo? Foreo is a revolutionary skincare brand that's all about bringing spa-like experiences right into the comfort of your own home. They offer a wide range of innovative beauty products that are designed to help you achieve radiant, healthy-looking skin. From facial cleansing brushes to anti-aging devices, Foreo has something for everyone, regardless of their skin type or concerns. Now, I have to tell you guys, I recently got my girlfriend the UFO 2 supercharged facial device. She's been using Foreo for a while now, but let me tell you, she was wowed away. The Foreo UFO, along with the skincare masks Call It a Night and Make My Day, is designed with a combination of cutting-edge technologies. This revolutionary device leaves you with an instantly nourished, healthy glow from the very first use. And it's also app-connected so that you can personalize and recreate your own spa treatment from home, covering any skin type or concern. They're also very gentle on the skin, which is a huge plus because it reduces puffiness and shrinks pores. The app comes with the product and is connected so that you can personalize and recreate your own spa treatment from home, covering any skin type or concern. Foreo is a thoughtful gift that shows you care about her well-being. So there you have it, guys. Foreo is the ultimate self-care gift for your girlfriend or your mom or even yourself. Trust me, she will thank you for it. If you want to give the gift of beautiful, healthy-looking skin, be sure to send your girlfriend or your mom to Foreo's website by visiting my description box below for a special code. Now, back to the video. We're going to now shift our focus to talk about the trading opportunity in China. This sector has been one large trading battleground. It's disappointed investors, but it has rewarded tactical traders. Look here, darkening gloom in Chinese stocks puzzles Wall Street veterans. In fact, US listed China stocks see a $100 billion wipeout in a very jittery month. We all saw that large rally in the Chinese internet sector after Baidu released their ChatGPT Ernie bot, which sent the sector up about 10%. And since then, that entire move, it's been faded, it's come back down. So is it an opportunity? Let's talk about that briefly now. China, they just called Ukraine for the first time in the war. And this geopolitical update could potentially be promising. Analysts say that the timing wasn't accidental. We all know that China has been trying to broker a peace deal between Russia and Ukraine. If they indeed are successful in that endeavor, that could send US and China stocks significantly higher. That could be a systemic change in the investment landscape in a good way, but we'll see whether that pans out. I recently said on Twitter that, as you can see from Lockheed Martin, getting rejected off that resistance level and now hovering at support, it suggests that there is a chance that China may be able to pull off a peace deal between Russia and Ukraine. On top of this, we're seeing a little bit more warm rhetoric coming out of the US, at least not so cold. Look here, US wants to de-risk and not decouple from China. That's what National Security Jake Sullivan said. And also, if you're worried about the Chinese economy, you really shouldn't be that worried because, as you can see here, American companies in China are more optimistic on the economy. What's really worrying is the geopolitical landscape. The local economy in China is absolutely rebounding. The data suggests it. It's just that the geopolitical tensions is very, very strong. In order to follow where China is going, I'm going to be really paying attention to how the US handles their relationship with ASML. Here's why. ASML is Europe's most valuable tech firm, and it's at the heart of the US-China chip war. And the reason this is important is that a lot of ASML's biggest clients happen to be some of the largest semiconductor players in the industry, like Samsung, Taiwan Semiconductor Manufacturing, and Intel. So the way the US manages their relationship with ASML is going to be a very powerful signal to suggest how they plan to manage their relationship with China. But in the meantime, Chinese stocks are heavily discounted, and that means that a trading window has once again appeared. Once again, China is no longer, in my opinion, a true, pure buy and hold investment. That's, in my opinion, a little bit too risky. But from a trading standpoint, this is quite an attractive sector. Look at what I said here on Twitter. Also, I said my tactical China recovery plan is now in motion. PDD, Pinduoduo, Baidu, JD, they tested the key levels that I planned out and they all bounced from there. And so China continues to be an interesting trading opportunity, but for investors, probably best to stay cautious. Now, other signals that I'm monitoring include the fact that Europe is still very strong, and this suggests that China is doing decently from an economic standpoint given their trade relationship. We can see that the Europe Stocks 50 continues to hover near resistance, and it hasn't really retraced significantly from this key level. Now, back in the US thrift shops are thriving like Dollar Tree, Dollar General. These are names that I've highlighted pretty strongly inside my investment community. This also highlights the stress among US consumers. And finally, we can see that the US real estate market is quite weak, but it's not crashing. And in other words, the way I interpret this is that this is potentially good for bank stocks that are strong, such as Stay Street, such as American Express. These are names that I talked about inside my investment community, and those levels that I highlighted have since bounced from a trading standpoint. Now, make sure to follow me on Twitter, Instagram, and Substack for more strategy and insights. Thank you to Foreo for sponsoring today's video. And guys, stay safe. We are approaching a very pivotal moment in markets. I will continue to keep you updated, and I will see you guys in my next video.